does this mean for direct-to-consumer companies? We got a bunch of them in tech, a bunch of them powered by tech. Some of them didn't raise enough. Some of them are public, and maybe their models aren't fit for this environment.
Well, as you said, the era of free money is over, but the boom times were great. And 10 years of digital adoption was compressed into 12 months during a pandemic. So a lot of these DTC darlings became dependent upon cheap, customer acquisition, right? Fast forward, right, the world opens up again, and it's hard to compete now. Customer acquisition costs are through the roof. And then with supply chain problems, your cost of goods are also through the roof. So the model is temporarily broken, but now the VC community is paralyzed, right? We're all waiting for some clarity as to which way is the economy going. So what I've found, and I teach a course at Harvard Business School on this topic, and we just had all the founders in, I think a lot are going to have a hard time raising a Series B, and there's going to be a wave of bankruptcies and consolidation.
So what do you think that means for investors who are trying to assess which companies have business models that are going to be healthy into the future? You could argue that the likes of a Shopify, which supplies tools to smaller businesses, including customer acquisition tools within an app store, could do better. Or you could argue, hey, maybe they won't have as many customers around to do business because some of them are going to go blah. Yeah. What do you do?
Well, we don't have a demand problem, right? So everyone's addicted to e-commerce. That's not going to change anytime soon. I would be looking at infrastructure. I think Shopify long-term will be a winner, even if there's some consolidation. I had Harley Finkelstein up at Harvard, and he was talking about how omni-channel, the word is now gone. Everyone just understands that channel conflict is not a thing anymore. So you have the major players all moving into DTC, and they don't care anymore if it competes. So Shopify is good. And then those companies that are able to adopt with tools that enable lower customer acquisition are the winners. I can't believe I'm going to say this. Hopefully my kids don't see this, but I'm about to give a plug for Facebook. What Facebook is doing with Advantage Plus, which is using AI to go ahead and help DTCs acquire customers, saying, I can't figure this out. Here, you do it. And they're returning pretty amazing results. So I think Facebook could be a long-term winner.
Dad, you're such a boomer.
I know. Can't believe I had to do it. Now, the course that we talked about TikTok. Well, so in fairness, and I had Kim Kardashian up at Harvard. So that
I
would be
was
cool.
just going to say that, Matt. To counter your Facebook usage, you had Kim Kardashian drop in at your course. And I wonder, what did she tell the group? Is there something that she's doing different at Skims that a Kardashian is able to bring to the table that perhaps no one else trying to build a DTC company could?
Yeah, so the premise of this year's course was TikTok is your kids' Google, basically. They're turning to TikTok for search. So that's number one. And the real winners like Kim are able to use their ability to reach those customers directly and subsidize their CAC, their acquisition costs, because they're in the conversation. So the winners of the next year are going to be the storytellers. Everyone can learn from Kim Kardashian. The restaurant on Main Street can realize, hey, if I'm in the conversation, I don't have to pay to insert myself into the conversation.
Right. Okay. So for other brands that don't necessarily have Kardashian star power or that TikTok power, what happens to them? I mean, a lot of the D2C companies that went public over the last few years, we can't even mention anymore because they're penny stocks. Is there an opportunity for some of them to be acquired, be takeover targets of the Walmarts and Amazons of the world that are building their own private label businesses and might like to have one of them in their arsenal? I
mean, at the end of the day, right, there are some still great ones. I'm a believer in Allbirds. I think it's a great company, and at the end of the day, they'll figure it out. Some of them may have gone public prematurely with the SPAC craze and whatnot, but at the end of the day, there are great brands out there. It's all about LTV, lifetime value of a customer, figuring out more products to sell that customer that can enable you to justify customer acquisition costs. That's the bottom line. How do I sell more things, and how do I get my customers coming back more frequently?